Get to the street reaction to Walmart's latest results and commentary. Joining us is Michael Lasser from UBS. He has a buy rating on Walmart with a $113 share price target. Michael, it's good to see you. Fill in the blanks of versus what we've said already in terms of what you saw in the quarter and how you're thinking about Walmart's guidance from here.
Thanks, Mike. Good to see you. How we're thinking about Walmart's quarter is really, if you look below the headlines, it provided a lot of evidence to support the bull case. It's 4.6% same-store sales increase in the U.S., while slightly below the whisper expectation of greater than 5, was still very good and will look best in class as we get through the heart of retail reporting season. Second, it generated $500 million, $500 million of incremental operating income in the quarter. Half of that was from these alternative revenue streams like advertising, membership fee incomes. Walmart's still very much in the early innings of harvesting those benefits and experiencing a transformation in its model as a result. And third, I think you are absolutely right. The guidance did look a little bit below the street. But with that being said, I think it just simply sets it up for consistent outperformance over the course of the year. If I'm sitting at home, I'm looking at this pullback as an opportunity to get involved with a really multi-generational story that is compelling here.
I mean, it certainly would, I guess, be an opportunity versus yesterday, but the stock is just back to where it was a month ago or so. And I know your price target of 113. I mean, it still contemplates Walmart kind of building to this mid-30s type PE as a steady state. I mean, is that basically where you see things heading?
Yeah, so your question is probably why would that type of valuation be warranted?
Yeah.
And our argument would be twofold. One, the growth profile of this business is higher than it's been historically. It's going to generate high single-digit, low double-digit EPS growth for the foreseeable future by really this transformation in the model. And two, that is coming with a lower risk profile than it has historically. So the equity risk premium embedded in Walmart stock is lower. That translates to a higher multiple. So it's really those two factors that are driving this higher multiple, and we think it's warranted and will persist, and the stock can grow with earnings growth as a result.
Michael, do you expect as we move into retail earnings season, other companies' guidance to be as cautionary?
I do, Carl. I think it's going to be a story where the last several weeks have been a bit more volatile within the retail sector. Companies are going to want to take a more cautious approach as a result. There's obviously a lot of uncertainty on the horizon. It simply would be prudent to embed some degree of conservatism in the outlook to ensure that these companies are delivering on what they say they're going to do this year.
You know, if that's the case, and probably makes sense that managements are not going to be too specific in terms of what they're building in the way of assumptions when it comes to things like tariff policies, is the market doing the same, essentially sort of reserving judgment, or in your mind, has the market rushed to kind of penalize those companies more vulnerable or give benefit to those that are more immune?
By and large, the market is saying we think the risk from tariffs is manageable. This is going to come from a combination of pushing back on vendors, changing domiciles of production, and when all else fails, passing along the tariffs in the form of higher price. That is the playbook that retailers are going to use. We think that's what they'll embed into their outlooks for this year. There is some degree of a penalty driven into some stocks that are disproportionately impacted by tariffs, those who have either exposure to lower income demographics that are going to be more adversely impacted by this tax on the consumer, or those who have a disproportionate amount of their sourcing from overseas. With that being said, the market is looking at this as a secondary factor right now, and just the state of the consumer is the overriding consideration of how the market is thinking a lot of these stocks.
Yeah, one last question on that front, Michael. We're not sure where the budget resolutions are going on either the Senate or certainly the House side, but one aspect had been a discussion of SNAP benefits. Would that be probed? Could there be a second look at what is given to low-income households in the form of assistance? If that were to play out, would it be material to Walmart?
For Walmart, less so. It generates about 2% of the sales in the U.S. from SNAP. For other retailers, it could be more significant. The dollar stores generate a greater percentage of its sales from this source. With that being said, what tends to happen is the consumer who's dependent on this SNAP tends to pull back in other areas to put the basic needs on their table. So while it is a consideration for the year ahead, it's something that will be manageable for most retailers who are exposed here.
It's good nuance. Michael, thanks very much.
Thank you.
Appreciate it.